There we go.
All right. Well, today we're going to kind of be going over on my side of things I-9 and employee Social Security compliance. This is something we've been having just some issues with, all over the place. We've had folks with I-10s, we've had folks with just numbers that aren't correct, and some of the compliance issues we've kind of seen about that. So that's kind of what I'm going to be encompassing as a topic today.
And there we go.
All right. So we've got some requirements and legal obligations with the I-9. The I-9 is that official record of employment eligibility verification. So that's what the government is basically using to say, hey, is this employee legitimate to work in the United States? It's mandatory for every employee in the US. And it is on the employers to verify both the identity and the work authorization. It's not optional and it has to be done timely and correctly. So, the reason we're saying this is just so you don't get into a situation with the government where you're like, hey, I didn't know. And then the government's telling you this was mandatory. This is not something you can skip over. And the reason for that is because the Immigration Reform and Control Act of 1986 requires the proper documentation or the proper completion of those Form I-9s. So it is a law. We got to have that on file. We got to be making sure the employees are able to work in the US. Slide here. There are some kind of red flags. Payroll relief will throw up these red flags, and if we catch them, we'll reach out and say, hey, this is what's going on. But there are things that you guys should watch for as well. Any sort of bogus or mismatched social security numbers are a serious red flag. You might get one that's looking funky and you put it in the system and you're just hoping, oh, well, hopefully it is a correct number. And then it comes back at the end of the year and boom, not only can we not file any of your taxes through the payroll relief system, but now we've got this person that we're trying to figure out, were they a legitimate worker? Were they an immigrant that maybe hadn't gotten set up yet? Like, what's the situation? How are we going to properly handle this? And it could cause some pretty major compliance issues. So just something to note. Those failed SSA verifications, a lot of times they'll pop up from things like I-10s. Another one that I know instantly fails is if you just put in all the same number for every part of the social. So 555, 555, 5555, instant fail. Other ones are like 1, 2, 3, 4, 5, 6, 7. So just be watching for stuff like that. It can cause major, major issues. The other thing is too, if you do catch these things, sooner rather than later, we do want to try to get them taken care of. Government is going to be more lenient if we come forward and say, hey, we caught an error. So, just make sure that we are not having any payroll processing failures, any compliance violations because of bunk social security numbers. Thank you, Tyler. There's a bit of an audit risk. There's some enforcement actions and potential penalties that come along with kind of ignoring these guidelines. They can trigger audits from 3 different departments: the Department of Labor, the Department of Immigration Customs Enforcement, and Department of Homeland Security. So all 3 of those government agencies will be watching for this kind of stuff. And during this current administration, the enforcement activity has ticked up quite a bit, heightening employer risk. So we're just sort of, trying to get that out there. I really would not recommend, putting folks on who are not legitimate workers in the United States, especially in the current time and current climate. Penalties range from paperwork fines to substantial per employee penalties. Additional exposure can escalate up to back taxes and corrective filings. And if they, have a really severe case where you've got a whole bunch of folks who aren't filled out properly, and they can determine that you were willfully ignoring this, it can go all the way up to criminal. So these can be serious. We're just wanting to make sure no one is having any sorts of these problems. Ooh, one too many. Like I said earlier, being proactive does help prevent downstream reporting and filing delays. So, if you just hire on someone in quarter one, you get midway through and realize, oh gosh, I don't think this social security number is legitimate. What do I do? Reach out to us. Let's start trying to fix it then. It would be much better to get it done mid-quarter than get to the end of the quarter, get a message from us and say, hey, I tried to file this. We got a rejection on the social security end. What do you want us to do? The sooner the better. It also, like I said, makes the government a little more willing to, it doesn't really look like willful ignorance. if you're coming to the government and saying, hey, I think we made a mistake, we're trying to get this mistake corrected, we're trying to do X, Y, and Z to make sure that this employee is legitimately reported. And lastly, just keep in mind that I-9 forms should be retained either 3 years after hire or 1 year after termination, whichever is later. They just want you to keep those records for a bit of time in case something were to come up. Once those times passed, you don't need them anymore. I turn it over to Tom.
All right. Some great information there, trying to stay in compliance. There's another compliance topic in a way, because we do get this question a lot of basically, what counts as a business expense? What can I deduct on my taxes? And the overarching rule for that is that it needs to be ordinary and necessary. This is the IRS's terminology. What they mean by that is that it's ordinary in the sense that it's normal for your business. It has to make sense with your industry and specifically what you do. So if you own a landscaping business, you might need a lawnmower. That's a pretty typical, thing you'd expect in that industry. If you're an accounting firm, you probably don't need a lawnmower. That really doesn't make sense for your industry. So that's really what they mean by ordinary. It makes sense for your business. And then necessary in the sense that it is for the business and it is helpful for the business. That doesn't mean it has to be indispensable. So, there's certainly things that you might pay for that are helping your business, but you could maybe get away without. You pay for your marketing expenses. You might outsource some costs, to do services that you don't want to be able to do yourself. Those might not be necessary in the sense of you could get away without them, but as far as being helpful to the business, they are necessary. The big point here is that it needs to be for the business. It's not for your personal benefit. It's not for your family. It's not for your hobby, or it's not something fun. It is for the business. It's profit motivated. Another key here is it generally can't be extravagant. So there are instances of where there might be something you need for the business, but there's also a reasonable factor to it. Do you need maybe a coffee machine for the office? Sure, it's something good to have for your employees. That's ordinary and necessary. Do you need a $10,000 espresso machine for an office of 5? Maybe not. That might be a bit extravagant. So that's kind of what the rules are as far as how this works. And of course, sometimes there are expenses that have a little bit of both. Maybe you have a software subscription that has both personal and business applications. That could still be a ordinary and necessary business expense. You just might have to prorate that based on how much of it's business versus how much is personal. Another part of this discussion would be when you capitalize versus expense. That wasn't really the topic for today. This is more about whether it's business or personal. That will be a topic in the future of, is it an expense or do we need to capitalize it, put it on the balance sheet? So this is my usual advice to our clients, and the silent partner test. And the way you do this is you imagine that you have a silent partner in the business, someone who's invested with you. The business's money is your money as much as it is theirs, and you really shouldn't be using those funds if it's not to the benefit of the business and therefore both you and your business partner. And so the question becomes, is the thing you're buying something that this partner would agree with is benefiting the business? And so this really helps put into perspective, whether it is ordinary and necessary. If you go to your partner and say, oh, I need to buy these office supplies for the business, we need these materials so we can do office work, something like that, they're going to agree to. Of course, that makes sense for your business, or a marketing expense. So even if it might be something that's a decision to be made, is it going to be worth it? It's still for the business and it still makes sense. But if you go to your business partner and say, hey, I want the business to pay for my family's vacation to Florida, and there's really no business activity related to that, that isn't going to pass the test. The partner's going to say, why are you spending my money in the business on your family's vacation? That doesn't make sense. So that's just a good baseline to kind of judge whether or not something might be ordinary and necessary. So a few things I wanted to point out are what some of these ordinary and necessary expenses look like that might not be obvious. If you're self-employed, you run your own small business, these are things you might be paying for without realizing that they are in fact deductible. The biggest one's always a home office deduction because, quite frankly, usually that doesn't come out of pocket. There's no additional expense to that. So if you have that dedicated home office, that's something you can look into. Use of your personal vehicle. There are options for taking actual expenses. In my experience, most clients, it makes more sense to do the mileage reimbursement, just because for most folks, most of the miles they're putting on their vehicle are still personal. You can do a cell phone reimbursement. So if there's using your cell phone for the business, you can prorate that, figure out how much was for the business, how much is personal, and you can reimburse yourself for that. Different software subscriptions, like you maybe have an iCloud account you use for the business, even though that might not immediately come up as a business expense. Training and education, continuing education, things like that. But you're probably going to be doing anyway. But it might tie into the business. Self-employed health insurance. That's usually a really big one, especially with how much health insurance premiums have gone up. If you can pay for that through the business, if you qualify because you don't have health insurance through any other mechanism, that can be a really big deduction. Office perks and supplies, so things like maybe have some office snacks or other little office supplies that you might not necessarily think of as a business expense. Those definitely count. Business travel, so long as it's primarily for business, there's a profit motivation to taking that trip, and you're going to try to make the business some more money. Certainly, business travel can tie in. And business meals, I'll get into that a little bit on the next slide about what specifically counts, but as long as it's for the business, it should count as a business expense. So these are the common mistakes you see where people might think that it's an ordinary and necessary expense, but it really isn't. The biggest one, we see this all the time, is commuting. So you have that mileage expense, and you think, well, if I'm driving to my office, my place of business, that's business mileage. It's actually not necessarily. Commuting, just like if you were an employee for the business, driving to work every day is not actually business mileage. You aren't able to deduct that. And it also doesn't count towards the business use of your vehicle. So when you're keeping track of your miles, make sure to keep track of those commuting miles separately so you don't make the mistake of including those in business use. If you do take those actual expenses on your vehicle, it makes sense in some situations, especially if you're putting a lot of miles on the vehicle or you have a vehicle that really doesn't make sense to use outside of the business. You do just need to make sure you prorate the business expenses based on how many miles you're actually putting on the vehicle. So if you put 10% for personal, 90% for business, you got to treat 10% of those expenses as personal. For the business travel, there's nothing wrong with including personal elements to business travel. So maybe you're going to a conference in Florida and you want to spend a couple extra days on the beach. Who wouldn't want to do that on their trip? So long as your business travel is primarily for the business, then that's reasonable and acceptable, provided that anything that's only personal, maybe the days that you're done with the conference going to the beach, you would treat those as personal, but your overall travel expenses could still be business expenses. With that home office I mentioned, the key there is that you have to have a space that is used exclusively for the business. Maybe it's an extra bedroom, maybe it's your office in the basement, maybe you use the garage, whatever it is, as long as you're not using it for anything other than the business, then it might qualify. But the other key would depend on whether you have another place you're doing business. So if you have another office, maybe you see clients at, or your customers go to, if you're doing any substantial administrative work there, that home office isn't going to be allowed. The point of the home office is supposed to be you don't really have anywhere else where you're doing administrative work. So this, deduction's allowed. The example I usually use is if you maybe have a restaurant, where obviously, that's where your employees are working, that's where your customers are spending their money, but you just don't have a back office. There's nowhere to do administrative work at that restaurant. You could certainly qualify for a home office deduction then. For business meals, these are pretty straightforward. It either needs to be with a client or a vendor, or with most of your staff, or a part of business travel. Those are really the only three cases where business meals are deductible. In general, if it's just the owner, or as I've seen sometimes, if the business is owned by a husband and wife, if it's just the owners, that isn't going to count as a business meal. So it really needs to be profit motivated. There's a reason you're having this meal. It's to do that networking. It's to improve employee morale. It's part of your business travel. You gotta eat while you're on the road. Those are the reasons why you'd be able to take those business meal expenses. And I believe that is all I had for now. Wasn't sure if we had any more questions from the audience. We'd be happy to answer those now. And I'm sure we'll get some more comments on YouTube this week and see if anyone has some questions for us.
Please feel free to share this as well if you're on YouTube.
So, question about on the helpful side, if I'm doing like thank you gifts for people who send us referrals, that does that fall under the helpful, it's profit motivated to keep those referrals coming?
Absolutely, yes. Since that's certainly benefiting your business, you get those referrals, you're, rewarding those who've found new clients for you. I would say that counts. So long as you're meeting that rule of not having anything extravagant. If you're giving them a nice little gift basket, maybe it's even worth a few $100 because they brought a few $1,000s worth of business. I'd say that's fine. If you're giving them a new car, it might be a bit unreasonable. And that's kind of what it all comes down to is if it's reasonable, it should count.
Okay, perfect. Thank you.
All right.
Thank you.
Evan, did you have any thoughts on maybe what were some expenses that may and may not count?
I don't believe so, but I do think someone just joined.
But we did just get another someone hopping onto the webinar.
We did just end, but we talked about I-9s and compliance with I-9s, and then Tom just talked about necessary and ordinary expenses. If you have any questions over the topic, we'd be happy to take them right now. And if not, if you've got something you'd prefer not be on the recording, you can let us know as well. Just feel free to hop in. We're kind of in the question and answer section at this point. I did actually have a question for you, Tom.
Yeah.
If we're just kind of hanging out. Hey, Christopher, do you have a question?
I do. Just wanted to see if I could set up some one-on-one time with you all next week. Would that be possible?
Yeah. If you wouldn't mind, if you just want, do you have our emails by chance or maybe Bob's email? If not, if you want to drop your email in the chat, we'd be happy to send you a link to set that up.
Perfect. I will do. Thanks, fellas. Appreciate it.
Yeah,
Of
no
course,
problem
yeah.
at all.
Okay. Bye-bye.
Take care.
Maybe you did go over this already, but how would you define substantial admin work? Like if I went to a restaurant and, maybe did schedules, this is something I actually encountered in life. If the manager comes in just to do schedules, would that count as administrative admin work or substantial admin work?
And that really is part of the subjective nature of this.
Yeah.
That's a tough call, I could see it going either way. If it's just like one administrative task, maybe it only takes a few hours a week. I think the point of the rules is more, they just want to avoid situations where someone is doing almost all of their admin work in one place,
yeah,
and then they do a little bit at home.
And write that off.
Yeah,
I see.
exactly.
I think I did actually have another one. If you give me that mouse, I can pop back up.
And I don't think I'm sharing anymore. The other element of the home office thing is the intent there is if you can do it outside of the home and you're already paying to do it outside of the home, they really don't want to let you double dip and take both expenses. So
I actually think my other question was going to be on what was extravagant, but you got pretty detailed on that. So.
Yeah, most of the examples with the extravagant expenses, it comes down to those business meals because that's kind of the easiest thing to go overboard on.
I see. That's interesting. I didn't actually think it would be meals that are the most. I kind of thought honestly it would be cars.
So vehicles are a little tricky. There are, and that's probably a topic for another day about what all the specific rules are on deducting vehicle expenses. The nice thing about the way the law is written is there's essentially caps built in to the accelerated depreciation that you can take on luxury vehicles. So that even if you do have a luxury vehicle, there's still partially limiting your benefit there.
Okay.
And so that kind of takes care of the whole extravagant nature of it.
See,
So.
okay. I know we've had folks mention, I want a nicer vehicle because, marketing purposes or whatever we're gonna do. So I was thinking about that and how could a car be extravagant? Which cars are extravagant?
Yeah. And and the other thing with the vehicles is it really comes down to the miles you're putting on it, of whether it's business or not, kind of regardless of how nice the vehicle is.
Okay,
so, there's certainly nothing wrong with if you have a luxury vehicle, So long as you're still putting those business miles on there and it's not completely unreasonable, you don't have $1 million Ferrari, it's probably going to be okay.
Yeah.
Even if you have like a luxury SUV that might be worth $150,000, as long as you're using it for the business, putting the business miles on there, that's still acceptable.
Okay, that makes sense to me.
I know one thing that does trip a lot of people up is they get this idea in their head that if they just wrap the vehicle, they just use it for marketing purposes, that magically makes it 100% business, and that isn't really how it works. It all comes down to the miles. So
I guess I will ask one more question when it comes to like commuting. How do you really, especially with like a business owner who might be kind of moving all around a lot, how do they define commuting versus mileage?
So it all comes down to what the IRS calls your tax home.
Okay.
And this would be for most folks who have one primary residence where they go home to every night and live with their family. It's pretty clear cut where their tax home is.
Okay.
And that tax home is completely independent of where your business is or where you do your work.
Okay.
We even have one client who, they own a business in Arizona. They actually live in Ohio. And so by the letter of the law, the travel from their home in Ohio to their business in Arizona
That's commuting.
is considered commuting because his tax home is in Ohio and he doesn't have any business activity in Ohio.
Okay.
Now, kind of one of the ways you could work around that is maybe you have a business that has two branches, one in Ohio, one in Arizona. In that instance, you could try to make the argument that when you're traveling from your home in Ohio to the other location in Arizona, that itself isn't commuting. That is a business trip from one location of the business to another. And that's the distinction there. There's a big difference between your tax home and the business locations that you're dealing with.
So as far as the government's concerned, they really want to know when you're traveling between home and work, and that's
the biggest thing.
Okay.
Yeah.
All right.
And there are, plenty of industries where it gets extremely complicated. Maybe if you're a real estate agent and you're driving down, to 10 different locations in one day, trying to figure out, so that is commuting, how much of that is business miles. It can get a little tricky.
Yeah, that's the kind of stuff that I was thinking, where's the commuting? Where's the mileage?
All right.
No. Amy, do you have any more questions? I know we were kind of just rambling there for a moment.
I don't. I am good. Thank you very much. You guys have a good weekend.
Yeah, you as well.
All right. Thanks.
Have a good one.
You too. Bye-bye.
Yeah. I think my only question I had on the I-9 compliance is kind of what is the end result then if you hire someone and they give you a dummy SOCH or they try to put an I-10 on an I-9 and they just can't come up with a valid SOCH. You kind of let them know you need this. If they just can't provide it, you just have to let them go. There's just really no other way about that.
So the only way that we really have found so far is by putting folks on a 1099. However, if you've been putting folks on a W-2 for a whole year, and you get to the end of it and realize, oh gosh, I should have put this person on a 1099, there will have to be a lot of cleanup to go back and rectify all of that. Because basically you don't want to have someone partially on a W-2 and then partially on a 1099.
Oh, no,
that is going to start flying a big red flag.
I've had to do audits for that before. Oh yeah, that's never fun.
So yeah, that's sort of the situation we want to avoid when it comes to that issue.
Got it. Okay, that makes sense.
Well, looks like we're empty.
That's probably all we've got for today. So until next time, we'll have another great webinar next week, and come at us with those questions, and we'd be happy to help you out.
Absolutely. Have a good one, folks. New client.